Airbnb was probably the hottest IPO in 2020. The company started trading in the Nasdaq at $146 per share, which is more than double the $68 per share price set for its IPO. It rallied even further to more than $200 a share, but that did not last long as the markets crashed due to a worsening global economy. To make matters worse, a short report against Airbnb was recently published, which added more pressure to the stock. Now the stock has dropped below its IPO price, which begs the question, is Airbnb a great investment at current prices? In this video, we'll do a deep dive on Airbnb, including its competitive advantages, financials, valuations, and more. My name is Riado, and if you're new to this channel, I analyze some of the most innovative companies in the world and help you find the companies of tomorrow. If that is something that you like to hear, don't forget to subscribe so you won't miss future videos. With that said, let's get started on Airbnb stock. Airbnb was founded in 2008 in San Francisco when two broke and unemployed young men, Brian Chesky and Joe Gebbia, were struggling to pay rent for their apartment in the Bay Area. Fortunately, a small observation sparked a business idea in them. Specifically, the two friends noticed that all the hotel rooms in the city were fully booked due to a nearby conference. As such, they decided to rent out air mattresses in their apartment to attendees of the conference. To their surprise, 3 guests booked to stay in their apartment, paying $80 a night during the conference. This is a revelation for the two founders, as it meant that their venture had product market fit. And not long after, the third co-founder, Nathan, joined the team. The founders launched their official website and named their service Airbnb, a website that offers short-term stays as an alternative to expensive hotels. This was done in preparation for the Democratic National Convention in Denver, which was expected to attract at least 20,000 people into the city, and that will cause a shortage in available rooms in hotels. And guess where some of these hotelless visitors turn to? You guessed it, Airbnb. So after the successful launch in Denver, the 3 founders realized that they needed more money to expand the business. With the ongoing 2008 US election, the 3 founders created custom-made limited edition Obama O's and Captain McCain's cereal boxes, and they sold them for $40 each, and by the end of the campaign, they raised more than $30,000 to put towards the company's operations. Fast forward to today, Airbnb has grown to over 6.6 million listings on the platform, attracting over 1.4 billion guest arrivals in more than 220 countries and regions worldwide. In short, Airbnb is the ultimate hosting platform for stays and experiences with a mission to create a world where anyone can belong anywhere. So basically, Airbnb provides a two-sided marketplace for hosts to list their properties and for guests to stay in those properties. Airbnb also enables hosts to share their knowledge, interests, and skills through Airbnb experiences. Some examples include hiking tour, cooking lessons, and workshops. According to 4-Week MBA, Airbnb generates revenue by charging guests a service fee between 5 and 15% of the reservation, while the commission from hosts is generally 3%. The platform also charges hosts who offer experiences with a 20% service fee on the total paid amount. So here's a quick example. If the host lists a stay for $100 a night, the host makes $97 after deducting a 3% commission or $3 which Airbnb collects. On the other hand, the guest pays $116, which includes a 12% service fee and the rest to cover taxes. Airbnb receives a total of $15 per night from both parties. Now let's take a look at the competitive advantages or the moats of the company. I think the first one will be technology. So through its two-sided marketplace, Airbnb is disrupting the traditional lodging and hotel industries. Airbnb pioneered the home sharing business model whereby Airbnb connects homeowners and guests together as opposed to online travel agencies like Expedia and Booking.com, which connects hotels and guests. And essentially, Airbnb enables guests with the opportunity to stay in other people's homes, their unique unique homes, allowing them to fully experience local cultures and ways of living. These are things that traditional hotel companies fall short in. Not only is Airbnb the first mover to the home sharing business model, but the company consistently innovates its platform through countless product updates. In particular, every winter and summer, Airbnb releases product updates to make their platform even more user-friendly and intuitive, and therefore enhancing their technology moat. So another competitive advantage, in my opinion, is their brand. Their brand is really powerful, and Airbnb is pretty much the go-to platform for vacation rentals, and I consistently find myself returning to the platform looking for unique places to stay in, and these listings can't be found in any other platforms. In addition, Airbnb has joined the short list of companies that became verbs, including Google, Uber, Photoshop, WhatsApp, and Zoom, and that is really a testament to its brand power. The next moat, in my opinion, is scale. I think Airbnb is a behemoth in the lodging industry. According to The Hustle, the number of listings on Airbnb is higher than the number of listings on the top 5 or 6, in this case, the top 6 hotel chains in the world combined. So this is an outdated graphic by The Hustle, and it shows 6 million Airbnb listings, but as of the end of 2022, the company has 6.6 million active listings, which is way larger than the hotel chains combined. It is also worth mentioning that Airbnb's listings are spread across a wider area, from major cities to the countryside. In contrast, the major hotel chains are primarily concentrated in urban, suburban areas. In a sense, Airbnb is location agnostic, and that is a competitive advantage that pairs well with its scale moat. And last but not least, I think Airbnb has a network effects moats. On top of its over 6 million active listings, Airbnb's two-sided marketplace boasts the following metrics. Airbnb's massive network is also growing exponentially as guests become hosts. So during the Q4 earnings call, CEO Brian Chesky said that in Q4 of 2021, 33% of guests became hosts. In 2020, 28%. In 2019, 23%. So it is picking up. In other words, supply fulfills demand, and then demand turns to more supply, which will in turn be able to fulfill even more demand. So that is one powerful network effect modes happening within Airbnb's business model. So now that we've understand what Airbnb does as a company, let's dive into Airbnb's financials, starting with its growth metrics. So a recurring theme that you'll see is that in 2020, numbers were pretty bad due to travel restrictions and government lockdowns, causing revenue to drop really badly in 2020. Therefore, I think it's better to compare Airbnb's recent results with its pre-pandemic or 2019 performance. However, after the early days of the pandemic, you can see that revenue has, strongly recovered due to pent-up demand and restrictions easing. So for full year 2022, revenue grew by 40% to $8.4 billion compared to 2021. Compared to 2019, revenue was 75% higher. So that's really incredible recovery there. So strong revenue growth was primarily due to growth in nights and experiences booked and higher average daily rates, which led to a 35% increase in gross booking value. But do note that growth is slowing down, as seen by the 24% year-over-year growth in Q4 to just $1.9 billion in Q4, but slowdown is expected as the company grows over a larger base. Nonetheless, that is still a 72% increase from 2019 levels. So again, the strong revenue growth was due to increases in nights and experiences booked, which increases gross booking value based on higher average daily rates. Below, you can see how the number of nights and experiences booked has trended over the last few quarters. In 2022, nights and experience booked was 394 million, which is a 31% increase year over year, or a 20% increase from 2019 levels, and this was driven by strong demand across all regions, in particular in Europe, Latin America, and Asia. As a result of record nights and experiences booked, GBV was $63.2 billion in 2022, which is up 35% year over year, or 67% versus 2019 levels. The growth in GBV was due to higher average daily rates, which is modestly higher than 2019 levels. So 2019 levels was around $110 to $120, but today it is up north of $150 to $160. The higher ADRs was due to strong recovery in higher ADR regions like North America and Europe. For context, North America has an ADR of $240 compared to other regions which has much lower ADRs. However, we can see that ADRs have stabilized over the last few quarters as lower ADR regions like Latin America and Asia catch up with their recovery. So for example, in Q4, revenue earned in North America grew 19% year over year, while in Asia Pacific, bookings grew by 40% year over year. All in all, Airbnb is showing really strong growth and the company is showing better than expected recovery from the depths of the pandemic, and the company is much larger than it was before the pandemic as well. However, I think Airbnb's growth over the last 2 years was due to pent-up travel demand, and therefore I think the company is going to experience a major slowdown in 2023 and beyond as the company faces tough year-over-year comps. With that said, Airbnb still has a long growth runway ahead. According to the company's S1 filed in late 2020, its total addressable market is about $3.4 trillion. On the other hand, its serviceable addressable market is estimated to be $1.5 trillion, which includes $1.2 trillion for short-term stays and as well as $239 billion for experiences. So this figure seems huge given that Airbnb posted only $63.2 billion of GBV in 2022. In a sense, Airbnb has barely scratched the surface of its market opportunity. Turning to the profitability of the company, 2022 gross profit was $6.9 billion, which represents an 82% gross margin. Airbnb has one of the highest gross margin profiles I've ever seen, which shows high earnings potential for the company. So we can see how gross margins have fluctuated over the last few quarters due to seasonality and the timing of when revenue is recognized, but Q1 gross margin is typically the lowest compared to other quarters as most of the revenue is recognized in the back half of the year. Thus, we can see how gross margins typically bottom in Q1 and then peaks in Q3. Nonetheless, gross margins continue to improve year over year. As you can see, gross margins in Q4 was 82%. In 2019, it was 73%. In 2020, it was 76% and 81% in 2021. So that really displays economies of scale in the business model. With that said, operating profit came in at $1.8 billion in 2022, representing a 21% operating margin and a major improvement from 2021 operating margin of 7%. Q4 operating profit was $235 million, which is a 12% margin, also a major improvement from last year's 5% margin. So the big drop that you see in Q4 of 2020 is due to heavy share-based compensation as a result of the company going public. And since then, operating profits have improved as SBC goes down and the company gains operating leverage. So most of the improvement in operating margins is from operating leverage. As stated in their earnings release, all recurring operating expense line items except for general and administrative increase more slowly year over year than revenue, allowing for considerable margin expansion. So the company also did layoffs and minimal hiring over the last 2 years ever since the pandemic started, which reduces even more operating expenses. And compared to 2019, headcount is down 5% while revenue is up 75%, which is incredible. So similar to operating profit, net profit was $1.9 billion, which represents a 23% margin and materially better than the 2021's negative 6% margin. This improvement was primarily due to revenue growth outpacing the growth in operating expenses as well as cost management. Overall, Airbnb has high earnings potential as demonstrated by its improving and high gross margin profile. Operating and net margins have improved as well, showing the continued strength strength of Airbnb's business and discipline in managing cost structure. This eventually allows the company to reinvest into the business over time. Turning to the balance sheet of the company, Airbnb has a fortress balance sheet with $9.6 billion of cash and short-term investments as of Q4. The company has $2.3 billion of total debt, which brings their net cash position to $7.3 billion. Airbnb also has a current ratio of about 2 times. In addition, Airbnb is also free cash flow positive. In 2022, Airbnb generated $3.4 billion of free cash flow, which produced a crazy free cash flow margin of 41%. With its free cash flow, Airbnb repurchased $1.5 billion of its stock, reducing its share count from 703 million at the end of 2021 to 694 million at the end of 2022. So with the amount of cash they're generating, I expect Airbnb to continue to buy back shares, especially if we see new lows in the stock price. Overall, Airbnb has a pristine balance sheet and the company has high free cash flow margins. That means the company can generate lots of cash and use that cash to reinvest into growth, even in a recession, which helps you to sleep well at night. This is part 1 of my Airbnb stock analysis, and if you're interested in watching the second part of the video where I talk more about the valuation and the risk of the company, you can click in the video right here, or you can find the link to the second part in the description below.